Why do we have to prepare a schedule for the non-current assets? We have to prepare a schedule for non-current assets because these assets are moving into the business or out of the business. There's always a movement in terms of non-current assets. Sometimes we dispose and sometimes we buy new ones. So there are movements in between the operations of a company or a firm or a business. That's why we have to prepare what a schedule for non-current assets. So look at what I got here. The schedule of non-current assets is a summary of the movement of non-current assets over the years. It shows the additions of disposal and revaluation of non-current assets. For example, what addition is here? When you purchase a new non-current asset. Disposal, when you are selling an old or used non-current asset. And revaluation is when you are adding value. When you are evaluating, you are adding value to the cost of that asset.
So, for example,
It's okay, just sit down. If you want to sit down, please sit.
I would like to go to an extension.
There's no way you can take anyone here.
This one is empty.
Very well.
Thank you very much.
It's okay.
You don't want to draw.
So, now, how do we construct stock items? How do we construct the schedule for the non-current assets? The first thing you have to take note is that there's going to be a purchase of a new asset, which is going to read through the historic cost in the cost of purchasing it. So here, the process of constructing the schedule of the non-current asset as follows. Enter the cost of the non-current asset at the start of the year. So you are starting your accounting period, maybe 1st of January. So you have to record the non-current asset as at that time. Addition, add any cost of non-current asset that has been bought. So if the business or the firm or the company has bought new non-current assets, you have to add them on to the cost. Disposal, at disposal is when you are selling your non-current assets. What do you have to do? You have to subtract the amount of the non-current assets you are disposing. The fourth one, total the cost of the non-current assets at the end of the year. So at the end of the year, you total, you add the new current assets, the ones that you disposed, then you total them together. That is what it means here. The cost of the non-current assets together. The fifth one, enter the opening balance for provision for depreciation. For each asset, you have provision for depreciation. So if you have motor vehicle, it's going to have its provision for depreciation. Are you here? If you have equipment, it's going to have provision for depreciation. If you have property, it's going to have provision for depreciation. The only asset that's not going to have provision for depreciation is land. Land does not depreciate, rather it appreciates. Remove depreciation from the asset sold. The asset you are selling, you have to take away the depreciation because it's gone already. Calculate the total depreciation charge for the accounting period. So all the depreciation, that means disposal of the asset, the depreciation on it, and the provision for depreciation for each item, maybe property, maybe equipment, maybe vehicle. You have to add all the depreciation together. So when you add them together, it gives you your total depreciation. So your total depreciation from the end year cost will give you what? The carrying value. Do you get it? The provision for depreciation you have for each item and the amount of depreciation prepared for each item, when you add them together, you have your total depreciation for that year. You take it away from the cost, the year-end cost, to get your carrying value. So look at the format here. The cost as at the beginning, we said here, enter the cost of the non-current asset at the start of the year. So the start of the year is 20x6. January 20x6, that's the start of the year. You enter the cost for equipment, the cost for motor vehicle, the cost for property. The next thing you do is addition. If you have bought new equipment, you add it. If you have bought new motor vehicle, you add it. If you have bought new property, you add them on. Then the next thing is if you are disposing. For example, you are disposing motor vehicle. So you take it away from the new ones you have bought. Please be here.